So, did you ever wonder what questions mortgage lenders or mortgage brokers hate when you ask these questions? Or maybe you were never curious about it, but you actually want to have an intelligent conversation with your mortgage lender or mortgage broker. And so, I'm going to share with you 3 questions that we hate to hear or be asked. And you know what? The surprising thing is that it's not just clients or customers or home buyers that are asking these questions, but surprisingly, even realtors ask these questions. I don't think, with any ill intention or anything, but I don't think they know any better how to ask these questions or how to actually start this conversation. A lot of them simply, they just ask it because they don't know any better. And then unfortunately, some even mortgage lenders or brokers. And what I mean by that is loan officers ask questions like these as well, which is really, I don't know, I think it's sad because they should know better to ask more intelligent questions so that, when they're having conversations with us, that we are having a more constructive conversation, something that's more meaningful than wasting time and trying to, get to a more specific I guess, answer, right? Because a lot of these questions it depends on the way the question is asked as well as the information that's provided for us to provide an answer. So I'm going to get right to it. So the very first one that I think is pretty surprising, and now realtors don't ask these questions. It's typically a lot of home buyers. And so the first question that not necessarily realtors are asking, but home buyers are asking is, why do I have to provide so many documents for this process? I think that's really interesting if you think about it because, the wholesale lender, the lending institution that's letting you borrow money, it's hundreds of thousands of dollars, right? They're letting you borrow money to buy a property because you don't have the money to purchase that property in cash. And so I think there's some, I don't know, maybe there's some entitlement or some maybe misunderstanding or maybe ill preparation in terms of from the broker or the lender or the loan officer that's not preparing you in advance what's required in order to start this process. And if that's so, I'm going to tell you right now that there's going to be required a lot of documentation, at least in the United States, in order to start the loan process, the loan application, as well as purchasing a home. Okay, not just signing a bunch of documents, but things that you need to submit depending on your situation to the loan officer, because of the fact that, again, a mortgage underwriting process is a risk mitigation or a risk assessment process, right? They're trying to determine what's your risk profile and what's the level of risk that we are exposed to as a lender to let you borrow money. In terms of, what's your chance of going bankrupt or leaving your job and not being gainfully employed or going on a foreclosure or something. And so with that in mind, they need to be able to analyze, right? Review your situation to understand and determine what is your risk profile. And that's why typical underwriting process requires pay stubs, W-2s for the last 2 years, bank statements for the last 2 months. If you are a resident or you're a citizen or U.S. citizen, if you have a green card and you're a permanent resident, then you're going to need to show proof with your green card copy. And there's various other things, right? Home insurance and stuff like that. And then obviously ability to pay and all of that with your assets. But those are typical documents, and it's not that hard in terms of, obtaining it and then submitting it. I think the problem is people think that, you just need to fill out some information and then you're going to get magically pre-approved and approved for a loan so that you can buy a home. And that's not the case, especially in the United States. And then on top of that, if you're self-employed, you're going to need to provide at least 2 years of tax returns. Sometimes you're going to have to provide a P&L statement or at least check deposits for the last 12 months, depending on the loan product that you're looking into. Now, it's not for me, I'm not trying to scare you with the process, but I'm trying to prepare you for what's to come if you are considering purchasing a home, because of the fact that it does require you to show proof, right? All of us, including myself, if I want to buy another house, to show proof that I can make the payments, I have the ability to make the down payment as well as the closing costs before closing on the property and proceeding, right? Because we have to go through this process to ensure that we're not going to go on default on the mortgage, and we're not going to go, bankrupt or foreclosure and all that stuff, right? And so that's why all of this process is in place, is to understand and review our risk profiles. And even though I'm a mortgage broker, if I had to buy another house, they're going to do the same thing. We're trying to assess what is my risk profile, and depending on that, right, the mortgage product and the rate's going to be determined based on that information. Now, piggybacking on that, I think the next one that's, it's surprising that even in 2025, realtors ask the same question, as well as a lot of home buyers these days in 2025, many years removed, right? At least 3 years removed from the refi boom and the purchase boom, they're asking this question, which is, how come my rate is so high right now when my neighbor, my friend, or my family member actually got a mortgage at a much significant lower rate a couple of years ago? And that's simply because mortgage rates went up. That's it. Mortgage rates went up. We had a historic low mortgage rates in 2020, 2021, and a little bit of 2022, but really 2020 and 2021. And that's primarily because of the global pandemic, something that was unforeseen, probably never going to happen again in our lifetime, which was the global pandemic. And what that did was drive mortgage rates down. And when that drove mortgage rates down and inflation was at an all-time low as well, then, the purchasing power for homes was at a record high. And you saw that and you heard that, right? People getting 30-year fixes at 2.5%. Some people actually bought the rate down at 1.99 and they were able to buy homes. They had 15-year rates at 0.9, 1.25% of those that were lucky. And so these were historically, you're never going to see this again. And so for a lot of folks, they have the predicament of being stuck in this probably a home that, they loved then, but maybe it's not suiting them now after a few years removed. But it's a, contemplation of, do I want to leave that rate to buy another home at a higher rate? But with that said, those rates are never going to come back. Another one where people are asking about the same question, how come my rate is higher than my friend that just bought a house maybe a month ago? Well, the primary reason is because your scenario is not identical to your friends. You might think, well, we are, have the same level of a profession, or we're making probably around the same type of income. But, the thing is, unless you have their entire loan application and you understand what their credit score is, how much they actually put down on their down payment, even though they saved a lot, maybe their down payment and cash to close strategy is different than yours, right? And then also you might not understand, what all their debts are, right? You don't know what their payments are and what their liabilities are. All those things play into the factor, as well as actually, in addition to that, what type of home they bought, a condo versus a single family versus a townhouse, and what type of loan product they got, right? Did they get an FHA, and which typically has a lower rate, but then it has a higher PMI, or did they get a conventional loan? All of these things plays into the final mortgage rate product, which dictates how much your monthly payment is. And so just keep in mind when you are, talking with your friends or family or neighbors, and they share with you, yeah, I was able to get this unbelievable deal for this rate. Sometimes they're not sharing the whole truth, right? They might not share with you that they actually bought the rate down because they had the ability to do so. And so, most folks in the mortgage industry, like loan officers, brokers, or lenders, they're going to be quoting you par rate, which means no points. Unless you request, hey, I want to buy the rate down at least a point or two or something, then they'll quote you those things. But typically, they're going to be quoting you at par rate, which is 0 points. Okay, so I want to educate you that, again, your friends and neighbors are most likely are not going to have the exact same scenario as yours. And this has been proven, as I've shared with folks that got referred to us, and they would say, hey, I heard, my friend X got this rate. Why am I getting a little bit higher rate? And I have to actually go through the process and educate them. Most of them believe me, but some of them, it's just hard for them to believe that their scenario is that different than the friends, right? So I just want to bring that to your awareness. And another thing that's, the number 3 is probably the biggest pet peeve question that all loan officers, lenders, brokers get. Okay, this is the question I think we detest to hear, but in a way, it just comes with the territory of the industry, and we're just obligated to explain and kind of go through this process. Is what's the rate? This question gets asked from my friends, family, to sometimes even in the industry, and sometimes realtors. Actually, a lot of the times, realtors ask the same exact question. They say, "Hey, Chris, what's the rate these days?" Without providing me any context. Like I'm supposed to share with them exactly and figure out what the rate is that's specific to the question that they're asking. It reminds me of a story his personal story of my dad when I was growing up. And we had to take our car to get the car fixed at the mechanic. And my dad, I don't know, he didn't really trust a lot of people. And so he didn't trust the mechanic. And he said, "You know what? Don't tell them what's wrong with the car. If they're good, they're going to figure out what's wrong and tell you how to fix it." And, I guess, he didn't want to get, he didn't want to get tricked into, all these upcharges of things to fix and stuff, right? When it really didn't need to be fixed. Cause, sometimes people aren't honest, and I understand that. But in terms of the mortgage process, we really can't provide you an accurate quote of what the rate is for your scenario, and if you're a realtor, for your client's scenario, unless we know what their scenario is. And if you haven't done the due diligence, and I'm kind of speaking to the realtors right now, the due diligence of, what their down payment is and their income is and their credit score is and the property type they're really interested in, right? At least those things, and their preferred mortgage product, then we can't provide an accurate quote. Otherwise, I'm just going to say, for a 40% down with a 800 credit score, here's the rate as a first-time home buyer, which is most likely not relevant and not relatable to an average home buyer, right? Especially for first-time home buyers, typically they don't have 40% down. And so just keep in mind to at least start the dialogue with sharing some information before you start asking, what's the rate? And now for home buyers, it's going to be the same thing. Be prepared to share your scenario before just saying, hey, what's the rate? Because we're not going to be able to quote you an accurate rate, right? And then for the most part, quite honestly, I'm going to create a whole new video about why there's certain things that I just hate about this industry. But the thing is a lot of loan officers, they're going to quote you a super low rate. That's probably unachievable. That's going to be like 1 or 2 points that you have to buy. 2 points meaning 2% of the purchase price or of the loan amount that you have to pay to get that rate, just to kind of bait you into having a conversation, because they know if you go through the process long enough that it's too painstaking, because again, you have to provide all this the documents and stuff and go through the process, that you're not going to leave them even though the loan officer sucks. And so just keep in mind to, at least if you don't want to go through that process and be stuck with a terrible loan officer, have the opportunity, right? Start the conversation to share that information. And what are they? It's going to be, how much is your down payment? How much have you saved? Which might not be the same thing, because there's down payment and closing costs. What's your income? What do you think your credit score is? What's your average debt before buying the house, before the mortgage payment, as in car loans and student loans and credit card debt? Those are those 2-3 typical things. What type of home do you want to buy? Is it a single family townhouse, a condo? And is it a primary home first, or a second, or an investment property? At least start that process to share with them, so that then at least that individual can provide you with an accurate quote. Then you can have that dialogue of, oh, that's interesting, because I know, maybe my friend bought a single family home, and I know for sure they put this much percent down. So how come it's a little bit different? And then you can have that constructive dialogue. But without providing that information, don't expect, to have the perfect rate. I guess in 2025, early 2025 right now, for a first-time home buyer, the rates are in the mid sixes. If you buy it down, it could be, in the low sixes, maybe fives, right? But again, the rate variation is about 2 to 3%, depending on if you're going to buy the rate, if you're going to go higher in the rate to get lender credit so it can offset your closing costs. Depending on your strategy of how you want to purchase the home is going to really dictate what your final rate is. All right. So with that, I hope this video was helpful. And then in the link description below, you're going to see a link for a free guide. So click on it. All it's going to ask for is a name and your email to just get a free guide. There's no purchase or money necessary for that. So with that, thanks again. Have a blessed day.